Joining us now, Renaissance Macro Research Chairman Jeff deGraaf. Jeff, great to see you. First, I got to ask you about the overall markets with the Nasdaq leading the way year to date and also in today's session. What do you see there?
Look, the trends are still positive. We're going into a tough patch seasonally, so it's something to be cognizant of. We've had a little bit of a shift in terms of sentiment. I don't think sentiment's a problem, but certainly the easy money phase, if there ever is such a thing, is probably behind us. I think we consolidate. It's not bearish. I think it's probably something in the 3 to 5%, tapping the beats here, and we move higher. But overall, still very constructive.
All right. So then, do we continue to see the broadening out of the markets that we have been seeing of late?
I think so. The one thing that would change that would be an increase in BBB spreads. So if we start to see credit conditions deteriorate, which we haven't seen, I think it's been the one area that the bears missed this entire year, which is the credit conditions actually, even though the yield curve was inverted, the credit conditions were still very, very supportive, and they continue to be so. And I think that that's going to be important. So as long as those spreads continue to narrow or at least be stable, the high probability event is that we get a broadening out of this marketplace. And so, we continue to like cyclicality. We continue to like areas of tech, albeit we think they probably consolidate, but they still look very, very good to us.
And yet you are bearish when it comes to the regional banks. That's a group that has seen a monster run just in the past month or two.
They've had a big bounce, a big rally. We thought that they'd rally back in the spring, and we were way too early on that. They've now come up in just about the 200-day moving average on a lot of the indices that we look at, but they look very vulnerable to us. They're below these large top formations in downtrends. They're overbought in a downtrend. We call those optimal exits in our work, and a lot of them are right there. So I think that they're going to be a struggle. I know that they're cheap. I know that there's likely to be consolidation there, but I think there's a big overhang that is probably going to prevent those from being leaders as we go forward.
Is your call different from the larger banks, J.P. Morgan's, Morgan Stanley's of the world?
Honestly, J.P. Morgan is kind of an island unto itself. If from a financial standpoint, owning J.P. Morgan, Visa, and MasterCard is about all you have to do, to have leadership in that sector. So the Bank of Americas don't look as good. The Goldmans don't look as good. J.P. Morgan is really, a leader unto itself. And so I would say the major players, the SIFI players, if you will, are not as bearish as the regionals, but they're really just not that compelling to us right here.
Key to all of this is the 10-year yield, Jeff. We saw that clearly in yesterday's session when the 10-year yield popped above 4%, and we saw that pullback in stocks. So what are you seeing here, and will it be a challenge, do you think, for stocks?
Yeah, over 4%, it starts to get into our yield impact model and starts to affect equities adversely. And so it's one of the reasons why we think consolidation is more likely here because of where we are on yields. I think, one of the things that's not being talked about much is the yen. And if we see a stronger yen, which is kind of this global liquidity measure, if we see a stronger yen, I think that's bearish for equities. It's, right now it's okay, but I think that's an important thing that people aren't watching that really needs to be tuned into, because a change in the global liquidity measures out of the yen would be really, really important. So that would be reflected in the 10-year yield. And then again, we'll watch BBB spreads to see if those are adversely affected. So right now, not a problem, but absolutely those are the focus for us in terms of keeping our eye on the ball and making sure that we don't whistle past the graveyard, if you will.